CEO confidence is ebbing. Purchasing managers' surveys are melting. If we look at capex, business spending, businesses opening up their wallet, it has been super light. And it's one of the big reasons many give for why the economy isn't doing better. Is that all about trade, Torsten? What's your thoughts?
Well, what's very important about that is that if you just look at the market here, it gives the impression that everything is fine, there's really nothing to worry about. But what these pictures are telling you is a very clear story, namely CEO confidence is currently from the conference board at the lowest level in a decade. I mean, we should probably be paying attention to why is it that CEOs are so worried. Likewise, capex has been slowing, and it's been slowing steadily over the last 12 months or so. And also, again, why are companies not investing more? All that combined with both manufacturing and non-manufacturing ISM trending lower, that is making us a little bit worried that maybe there is an underlying worry, in particular corporate America, about the trade war uncertainty, and maybe that is something that we do need to pay more attention to.
Well, I understand that all those can be attributed to trade war. Do you think that's all it is? Let me rephrase. If phase one gets signed and the markets get optimistic and get some detail on phase two and are okay with it, would all these issues over time, in your opinion, disappear, or is there something else?
Yeah, this is absolutely critical for the market. This is not really so much about what's happening in Beijing and what's happening in Washington, D.C. It's much more about what's happening in corporate America. How do corporate CEOs and CFOs think about trade war uncertainty? Do they come to the conclusion that now the trade war is over, so let's open the drawer and take out spending plans and begin to do a lot more capex? Or is there still an underlying fear that maybe the trade war will come back or continue, or it may not even go away? All these worries about how exactly do we quantify the impact of the trade war on CEO and CFO confidence does become a very important aspect. And the final thing of that, of course, we go into an election year. So if we are very unfortunate, we'll have a handoff from trade war uncertainty towards election uncertainty, which, of course, also begins to raise a number of questions about the outlook for capex overall.
You bring up an interesting point. On Friday when I had Ed Lazier, a straight middle-of-the-road economist, no political biases I've ever noticed during interviews, and he brought up the ever-growing notion that you have to start taking some of these Democratic candidates seriously and their proposals seriously. One of them is going to be the nominee. Your final thoughts, could the unknown of political candidates that could be president, could that have an impact on CEOs' spending with the unknown and some of the policies being on the aggressive side? Your final thought.
I do think it could. I mean, think about it. I mean, whoever wins the election, and even if Trump gets reelected, I mean, there's a lot of uncertainties about what will happen. A lot of discussions in the macro community, as you know too well and cover all the time, is about modern monetary theory. Do we have unlimited spending available? Can we just go out and spend a lot more money? And if politicians at the moment are told, not only by Jay Powell, but also by Draghi, that please go and spend some more money, well, then we could actually get a scenario where not only in the US, but also in Europe and around the world, politicians might take that, okay, if we're being told to spend some more money.